afternoon, everyone, and happy Thursday. You have Alyssa Corum and Ken Shreve here with a look at the stock market today. We're going to break down the action for the major indexes for you all, as well as take a look at a couple of individual stocks. Starting off, Ken, with the name that was added to Swing Trader and a couple of others. What do you have for us?
Yeah, I'll tell you, Justin and I, we often think alike, but we're going to talk about Dynatrace, which was among a large group of stocks that reversed impressively higher today. We'll also take a look at a rare breakout for Wix.com, software maker, and also ZoomInfo, which we've discussed in recent weeks, a recent addition to Leaderboard, also nice reversal higher today.
Great. First, a look at the major indexes. Here is the NASDAQ. And Ken, you mentioned a lot of stocks reversing. We saw the NASDAQ come down to its 21-day line once again and rebounded off of that level. So erased a good portion of the losses. Did close down, though, about 0.7% for the day. The S&P 500 down 0.4%. Same for the Dow, while the Russell 2000 suffered the worst loss. Small caps down about 1.3%. But all in all here, Ken, we've been saying once again with this quick rebound after the last pullback that we were still extended. So seeing another little pullback here, but 2 days in a row that the NASDAQ has managed to come off of the lows for the day. What do you make of it?
Well, yeah, I mean, Thursday was really a carbon copy of Wednesday. On Wednesday, we were down about 1.7% intraday and paired losses significantly. The percentage decline would have been enough for a distribution day on Wednesday, but you can see volume was quite a bit lower than what we saw Tuesday. And then today, I think the NASDAQ was down another 1.7, 1.8% intraday, almost exactly like yesterday. And it paired losses significantly, and volume looks to be lower than what we saw on Wednesday. So a lot of similarities between the two sessions, but the common bond is that we had lower volume on Wednesday and Thursday. So no distribution day for the NASDAQ, and we'll take it.
And then what do you think about the action that we're seeing in terms of support right around the 21-day line?
Yeah, it's uncanny. It's the NASDAQ. We got that initial sign of strength from the NASDAQ all the way back on November 5th. That's when we changed our market outlook essentially to positive uptrend, start buying stocks, and that 21-day line has been a consistent support level. There really only 2 times during this uptrend where it undercut, and it was such a brief, right there, and then rallied back the next day, and then a little brief undercut, so only 2 times. If we do eventually undercut it, listen, pull back to the 50-day moving average. If you're sitting in some cash and playing defense, which we've been advising in recent weeks, pull back to the 50-day is going to serve to shake out a lot of excesses that have been built up in the market. And there's still a lot of excesses out there. So we'll take another resilient performance for the market, even though we are still seeing signs that the market wants to pull back.
Yeah, and when we see these reversals off of the 21-day for the NASDAQ, we see some reversals in stocks, and that is definitely what we saw for Dynatrace today. Didn't quite come all the way down to its 21-day line, but it's been pulling back in light volume after this earnings gap, Ken. So with this upside reversal, that provides a nice buying opportunity.
Yeah, well, no doubt about it. And what I liked, I mean, going into, we were on pace for 7 straight declines for Dynatrace today. But even when the stock was trading lower, it was trading in the upper half of its range, like it did on Wednesday, like it did on Tuesday, and like it did, in recent sessions. It had been closing lower and but ending near session highs. So it's a very, very strong performance for Dynatrace today. A good example of what a bullish outside day looks like. You can see the high and low of today sort of engulfed the high and low from the prior session. You had volume pickup from Wednesday, so this was a nice swing trade for sure.
That it was, and added as a half position, I believe. And now moving our attention over to Wix, which is also in the enterprise software group, jumping some 14% today, Ken, on its quarterly earnings report. Still not profitable yet. Looks like profitability is expected in the future, but we did see a nice uptick in top line growth, up 38% from the quarter, accelerating from last quarter's 29% growth. And Wall Street liked the look of that.
Yeah, no doubt. And you can see actually over the past 4 quarters of earnings, you can see sales growth has actually, when we talk about accelerating sales growth, that's what accelerating sales growth looks like sequentially, from 27% to 29 to 38. So obviously demand very strong for Wix's software. This is an Israeli company. Again, kind of a choppy record of annual earnings, but this is a company actually that's known for spending quite a bit on research and development. In the latest fiscal year, about a third of their total revenue was spent on R&D. So that's a pretty hefty amount. So maybe that lack of profitability can be excused. But this definitely looks like an early stage breakout. Relative strength rating so-so. Relative strength line lagging a little bit, but good, powerful breakout today on a strong quarter.
And yeah, I know you always talk about seeing it closing in the top of the range. That's also good to see. And speaking of the lack of profitability at this time, something that Chris Gessel, our Chief Content Officer, has been pointing out is that the market has more and more been rewarding companies with that strong sales growth. And as you mentioned, Ken, we're definitely seeing that with Wix.
Yeah, and strong, consistent sales growth almost always makes its way to the bottom line. So I don't think profitability is not that far off. In fact, if you look at the estimate for next year, 2022, they are expected to swing to a profit of 38 cents a share. So a lot of good things in Wix's earnings report, and you can see outstanding price performance today.
That's right. And last but not least, ZoomInfo, ticker ZI, rounding out our trio of enterprise software stocks. We were pointing out an early entry in this base here, Ken, and now we saw this stock finding some nice support at its own 21-day line. What do you think?
Yeah, this is a recent new addition to leaderboard, but very impressive. This stock, it was actually strong all day, while a lot of growth stocks were under pressure when the NASDAQ was down 1.5% or thereabouts. ZoomInfo had been acting well. So again, a recent addition to leaderboard. It actually joined leaderboard on February 1st, just before, a couple days before it topped that 53.18 buy point. So nice support at the 21-day exponential moving average. ZoomInfo is among a group of 7 leaderboard stocks that are set to report earnings in the coming weeks. So I think right now our gain is 10, 12%, something like that on ZoomInfo. So that's a decent enough profit cushion, at least for now, where we'll probably hold through earnings. But yeah, you got to make sure you've got a decent cushion in a growth stock before earnings, so you can sit through some possible earnings volatility.
Very good point there, Ken. Thank you so much for your analysis today. And thank you all for watching. You can be sure the conversation, of course, is going to continue where, Ken?
IBD Live, bright and early, 6:20 a.m. Pacific time, 9:20 a.m. Eastern time. Always a lot of fun.
Yes, join us, investors.com/IBD Live. We look forward to seeing you and interacting with you there. And we'll also see you right back here after the close for our Friday episode of Stock Market Today. We'll see you then.